So morning everyone, welcome to Tradezilla Daily Market Commentary. This is Rajendran here joining from Bangalore. Time is 8:32 a.m. Today's date is 25th February 2016. And a little bit of about me. I'm a system trader since 2010 and I'm practicing discretionary trading since 2015. Running a portal called marketcalls.in, so which we predominantly focusing on trading analysis softwares and trading analysis. And I used to run a financial startup, so we are running a financial startup since 2014. And I'm very much passionate about trading system design. So, right, you can find most of my trading system online, right? So which is kept open source. We are having a complete set of library over there. And if you want to know more about me, you can go down to there was a link down here. Anyways, the PPT will be shared to you post the session. The session is getting recorded as well, right? So let's get into the global sentiment, right? So today is an expiry date, and so a lot of action will be happening in the market today, right? So prior getting into it, so we are conducting an Tradezilla 2016 mentorship event. It is one of the, we can say like a first ever online mentorship program from Market Calls, right? So we are focusing on concepts like AMI broker, AFL programming, Ninja Trader, and predominantly we are focusing on market profile, trading sentiment. So we are having an exclusive trading room where our trading indicators will be running over there, and every market days will be having a market commentary, and all the sessions, what are the sessions we are doing, everything will be recorded, and the recorded access will be given to you for 6 months, right? So, and yes, of course, we'll have a couple of sentimental tool access also for the participants, right? So, and let's get into the global sentiment, right? So yesterday Nifty was Nifty came down massively. There was lot many selling pressure in the market, and Nifty was down 90.85%. There was a negative sentiment was there in the market last 2 days because market was keep on falling relentlessly for the last 2 days. It had lost almost closely 250 odd points in just a matter of 2 days, right? So again, India VIX, surprisingly, it was down minus 2.77% yesterday. Even though market came down, the India VIX was maintained negatively, right? So this was quite surprising. Whenever there was a panic in the market, VIX used to keep increasing, but when somehow this is a little bit of difference from the nominal market, right? So, and USDINR was down yesterday. Marginally, nothing difference over there, but it's still at an peak level 68.58, right? And it's very close to the all-time high as well. And Asian markets, this is a snapshot taken around 8 o'clock in the morning. So Nikkei was trading positive, and Hang Seng was trading negative deeply, minus 1.15%, and SGX Nifty was trading marginally positive, right? And yesterday S&P futures, S&P spot opened gap down, went almost 1.2 odd percentage, and then finally bounced back because of the crude sentiment. The crude sentiment yesterday was negative. It came down and tested some $30 handle and finally bounced back and ended above 32 plus handle, right? So the crude sentiment made the S&P 500 market to get down negative, followed by an recovery, right? So European markets, anyways, it's ended deeply negative. DAX was down 2.64%, and CAC and FTSE was down more than 1.5%. Commodities, crude was yesterday it came up, but this is a snapshot taken around today around 8 o'clock. So currently it was trading around 32 plus handle, and gold was again trading positive so far, 1233. If you notice, the gold crude ratio is an all-time 30-year peak, which means either the crude is bottomed out or gold is likely to stay down, right? Or the movement of crude is more greater than the movement in the gold, right? So that way it could mean revert, the gold crude ratio might mean revert to the nominal, right? And let's go down and look into the Nifty and Bank Nifty charts with an top-down approach, right? So this is the Nifty futures monthly charts. So if you look at the monthly charts, you can see only one thing happening in the last 6 months. That's nothing but selling, 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 selling. Completely, we are forming an lower low and a lower high for the last 6 months consecutively. So what does that mean? We in market profile terms, we call this as an one-time framing, right? So and this occurrence, the 6th time continuously making an lower low and lower high, never happened in the past Nifty future monthly charts at least, which means the one-time framing is more likely to stop and we could mean revert from here, right? So we don't know what is the exact bottom we are going to make, or we already in the bottom, but 6 times one-time framing never happened in the history. Maybe March newer low, even if new low is possible, there is a high chance that it could make some sort of higher high. Well, means last week, I mean last month, the running month, February month, the high was somewhere around 7,600. So there is a high chance that we could mean revert and then we could make some higher high going forward in the March month, right? So that means there is a chance that 7,000 testing of 7,600 is possible, right? But let's look into the weekly charts and daily charts as well. So from the monthly charts, we are seeing a complete trend over there, right from 2015, somewhere around March 2015, we started making the downtrend. A clear downtrend is visible, right? So trend is completely down, but we are seeing a one-time framing on the monthly charts, 6 consecutive one-time framing bars. And then let's look into the weekly charts. The weekly charts again looks like some sort of an downtrending sort of movement so far. The trend started somewhere around uh, October, and then the downtrend is so far visible, right? And if I look into the daily time frame, so daily time frame, it looks like some sort of consolidation is happening on in the 7,200 to 7,000 zone, right? So it looks like to me it looks like a consolidation sort of zone, and there is no clear trend visible at least on the daily charts. So we are balancing between 7,000 to 7,200 zone. A lot of action is happening in that zone. So whenever market is trying to make an high above 7,200, it is pulling back. Whenever the market is moving below 7,000, it is again pulling back on the same day. So there was a huge congestion zone. And this is Bank Nifty futures daily charts. Again, the Bank Nifty futures daily charts, even though it had made a newer low, again on the daily charts there is no clear trend visible on the daily time frame, right? Otherwise, like monthly and on the monthly time frame, Bank Nifty was again showing a clear trend, and weekly charts also it is showing a clear trend. So let's look into the trading sentiment as well. So we use Zurich RSX to measure the sentiment. And currently, the sentiment turned negative yesterday in Nifty futures on the EOD time frame, as well as the Bank Nifty also yesterday the EOD sentiment turned negative. Right? What does that mean? So generally, the indicator turns especially at the peaks and the trough, right? So when the color doesn't matter anything here. So whether it is in blue or red or gray, it doesn't matter anything here. The turn from the peak and the trough matters a lot over here, right? So we use this EOD sentiment as a part of our trading. We use daily and hourly. Hourly generally we use it for measuring the intraday sentiment, and EOD we measure it to understand the positional trading wise sentiment, right? So yesterday it turned negative, and it doesn't turn negative since February 12. So yesterday it turned negative after a long time, and that means there is a change in the sentiment, right? So so every other indicator now, at least I mean if you take any time frame, any indicator, every indicator is in the negative mode, right? So every other indicator should be in sell mode. No indicators are in buy mode, right? including the EOD sentiment. You could take any indicator. It could be a super trend or RSI. You take any indicator, it's more likely to show in an negative sentiment, right? And if you also notice in the last commentary, we noticed and there was a one time framing happened in the charts 1, 2, 3, 4. This is the one time framing which happened on February 16, 17, and 18 and 19. That one time framing came to an end finally, right, within negative bars. So one time framing is more of an one can use it as a mean reversion sort of approach. One has to be cautious. So generally we use it to do either profit booking or to get out our position completely, right? So mean reversion trades also possible, but to do such mean reversion trade, one has to understand the market sentiment, right? So otherwise, just like that, if you are going to do a mean reversion by seeing an one time framing, it doesn't work that way, right? So you also take market sentiment into the picture and then try to adapt to that, right? And let me go back to the Bank Nifty sentiment as well. So Bank Nifty sentiment, if Bank Nifty is going to make any newer low again and newer lower low and lower high today, again there is a possibility of making an again another sort of one time framing in the picture, right? So again Nifty also saying so. Any lower low lower high formation in Nifty today is again there is a possibility of making an one time framing. So you can see already and three higher highs, three lower lows and lower highs are coming in. So any fresh lower low and lower high would result in an one time framing process. Fine, let me go back to the market profile references, right? We are not looking into open interest sentiment because today is an expiry date, so there is no point of looking into FIs or the normal Nifty options open interest sentiment, because today a lot of covering will be there and a lot of rollover will be there. So looking into the data is meaningless for last 2 days of expiry, right? And if you notice the current participant wise open interest, the participant wise open interest FIs are still both FIs and clients are in net longs so far. Yesterday the FIs increased their short position in the futures, and anyways the options at this point of time it's useless to measure it because of expiry, right? So from the future front, both the clients and FIs are positive, and FIs have built a massive long position in the market so far, right? There is no unwinding seen in the longs, but they equally increase their shorts as well. Whereas clients are so far bullish in the market, and last 3 days they increased their net longs, and of course in the call side also, in the option side also, they've shown bullishness for this expiry, and FI has shown a lot of negativity in this expiry, right? So the lot of action happened in February expiry on the option front, not on the future front, right? So but on the future front, FIs have accumulated a lot of longs, and one thing we need to observe is whether they are going to roll over all those longs today, or they are going to cut off and they are going to go with a fresh mindset. Because since we are having an 2 events lined up, tomorrow is going to be an railway budget, and Monday is going to be the main union budget coming in. So we need to understand what sort of mindset they are. So maybe around 5:30, the participation wise open interest data will be get released, and we'll get to know who is interested in what sort of position, right? Finally, let me go through the market profile sentiment, because market profile gives you a lot of insights compared to what the traditional indicator does, right? Let me go to the market profile sentiment for Nifty futures. So we'll take all the time to understand what the market profile is trying to do, right? So this is a market profile chart. So if you understand, the letters represents the market movements. Each and every letter represents an 30-minute time frame. So every letter represents every half an hour a new letter will be get formed, and I can split this profile as well here. So I can split this profile, and I can see how the market moved. So you can see the red color letter is an open, and the market came down at the letter A period, that is the first half an hour period, 9:15 to 9:45, and the second period, the movement was something like this, and C period. So combining all those periods, you get a market generated information. We call this as a daily profile. So this is a daily profile. It is not time dependent, right? So it is not a time based chart, but it is more of an price action based charts. It's more of a distribution sort of. And finally, you've seen a clear bell shaped sort of profile, right? So every day we don't get a clear bell shaped sort of profile, but the bell shape is the nature of the market profile. So what it says, it generally says what the market participants are trying to do, who is active buyers or sellers. So those kinds of information you can try to grasp from the market profile, and you can get a lot of insights from the market profile, right? So there are a lot of patterns in market profile, which are high probability patterns. So for example, one pattern here is nothing but, so we call each and every letter as an TPO, right? So if you notice the center of the profile, you can see an the total number of TPO is maximum. That is why we call it as a point of control. Whenever the point of control is more than 10 or 11, we call it as a prominent walk. So here is a prominent walk 7085. So it's nothing but a high probability zone. The prominent walk is a high probability zone where the price could touch in the shorter run, right? So one can expect an revisit price revisit of around 7085 zone, right? So market does only one thing. It does, and sometimes it goes in imbalance mode, and sometimes it does in nice. It shows some nice balancing action. So yesterday was a nice balancing action, right? So after an gap down. So, and also you can see a red bracket over here. So this red bracket represents the 70% of the volume. So that 70% of the price has been traded over there. So why it is so important? Because this is a zone which is considered as a fair price, and this is where the institutional traders love to play in these zones, right? So the red brackets. And let me go through the complete. So I marked this pause and reference, interesting reference level here, and again let me go through. There was an poor high. So poor high is nothing but some sort of matching highs or matching lows, right? So there was an this is another interesting high probable zone 7120. If I keep on going to the top, you can see I'm seeing a lot of emotional selling coming from the market. So who is selling this? This is on 23rd. 23rd, I'm seeing an emotional selling right from the open. There was an constant selling coming in the market. This is where we turned from the peak, right? So you can see a lot of anomalies over here. So here 1, 2, 3. There are total 4 anomalies here. So the 4 anomalies represents too much of emotional selling coming into the market. It's not an institutional trader selling in, but the shorter term weaker hands are trying to selling over here, right? So again, there was a single print reference here. So I'll mark this as an this zone 7195 zone. We have 7199. I'm sorry. So there was a single print over here. So I marked this as an interesting reference level because the single prints are the zone where market come and test and revisit those zones and clear those zones. And again, on 22nd, we are again having a prominent walk, right? So whenever I'm zooming this chart, I can zoom this chart. It gets from blocks to letters, and when I am compressing it, it becomes blocks, right? So this is the control given by the fin algo. Fine. So again, there was an prominent POC. So the prominent POC is nothing but an I can see some 10 TPOs, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So again, a high probable zone, right? If I scroll back, if I go to the top and then scroll back a little over here, so I can see and the previous charts. So there was a small gap over here. This is a 1 point gap. Let me compress this again. There is a small gap here. This happened on 10th of February, right? So right now we are in March contract, right? So I haven't taken any February contract because of expiry. So we are looking into the March contract, right? So there was a small 1 point gap is there. So if you understand gaps are more likely to be get repaired. So again, gaps are an interesting reference from market profile point of view. So 7314 is again an interesting zone. And on the top, we have one more prominent block which is remain unvisited. So 7347, and we have a poor high over here. So you can see matching three TPOs are at the top. So again, it's a high probable zone. So 7372, right? 7372, and there was one more gap at 7392. On top of this, we have two single print zones, 7645, 7465, and then 7490. So we have a lot of levels till 7500, right? Let me compress this chart and show you the number of levels, high probable reversal zones. So, right, so we have too many reversal zones coming into the picture. How many reference level? 1, 2, 3, 4, 5, 6, 7, 8, 9. Right, almost 9 reference level is coming on the. I'm sorry, it's not 9. It's supposed to be 11. So we have two more reference level coming on the top. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So what does this mean? Why there are so many high probable zone reference level remaining at the top and still market is not revisiting it? It means the market is extremely oversold, and there's high probable zones that all these levels are more likely to be taken out. Right? The question is when. But one thing is there, the sentiment, the street is completely negative. The every other participants are completely negative over here, right? And everyone wants an Black Monday, or everyone wants an market to go down below some around 6,600, and some people might have seen having a target around 4,400, right? So market doesn't work that way, right? So I am not saying like that there is a possibility of Black Monday or Black Friday. Yes, it's completely possible, but the chances of occurring such big cuts are very rare, right? So most of the time you can seeing this market moving from an sideways market to an trending market to an sideways market, right? So but those occurrences, the Black Friday or Black Monday sort of things, such occurrences are really going to be very low in probability. Right now every other indicator is in negative, right? So the street is completely negative. But we are going to turn up, we are going to turn positive, but the question is when, right? So at this point of time you can see the value area is keep on coming down. You can see on the value area keep on migrated upwards till 22nd of February. Later we started forming downwards, right? So yes, again from the market profile value area perspective, market is completely negative. The AOD sentiment is indicating negative. Every other thing is indicating negative, right? The only positive thing I'm seeing is there was a 6-month one time framing happening on the Nifty charts from the larger perspective, and we are having too many high possible reference level, almost 11 reference levels, which are high possible zones, which are more likely to be get revisited in the near term, which is pending till 7,500, and street is completely negative, right? And there are little hopes on the budget front, but I mean there are no huge hopes at least at this point of time, right? So and also people started expecting Black Monday or Black Friday sort of in the street. May happen or may not happen, right? So but the chance of occurring is really very less, right? So only one thing is to focus is, I mean I'm seeing that all these reference level are nothing but the cluster of stop loss where people love to take it up, right? So whenever the markets are leaving such reference levels, which is nothing but their stop loss reference level. So if you are seeing these levels are getting touched if you are seeing this, all these reference level are getting cleared one by one. You can see like the people's who are in short are getting their stop loss are getting covered in those zones more likely, right? So let's see. The street is completely negative, right? Yes, I had taken some longs yesterday. I'm holding it. I haven't taken in futures because I'm a little conservative at this point of time. I know every other indicator is negative across all the time frames, right? So I taken an naked call options at this point of time. So I want to be a little bit conservative. I don't know. I don't want to figure out that this is the actual bottom. I'm not trying to project like that. But only thing is, to me, it looks like the state of sentiment, the complete negative sentiment was there. Yes, of course. Whenever the sentiment is negative, I used to trade against my indicators, right? So this is what we do. So we know. I'll try to identify when to trade in line with my sentiment, when to trade against my sentiment, right? Against the sentiment in the sense sentimental indicators, right? When I'm seeing too much of emotions in the market, when I'm seeing too much of emotion in the market, I try to trade against my indicator. When I'm not seeing any emotions in the market, I try to go in line with the indicator. Right? This is what I'm practicing for the last 6-8 months. I mean, pretty decent stuff. Let's see this time how the markets are going to react, right? So I haven't taken futures because there is a if in case if there is any possibility of an massive downfall from here, so to protect myself, I limited myself to calls, right? Otherwise, I'm a directional player in the market more often. Very rarely I write calls or options. Very rarely I play with option strategies. Okay, I guess we came to the end, and I think we can take some questions, right? So let me go through the questions. If you have any questions, you can ask me the questions. You can put it down there. You can on the left hand side, you can see a question panel over there. You can ask me the questions. No questions? Okay, then I guess we can conclude the session. Can you explain one time framing with a chart? Okay, so let me see. One time framing is a concept which occurs in market profile as well as in the candlestick charts. So let me take a market profile chart and explain you how it works, right? So there is an let me take an yesterday's example, right? So this we generally use one time framing to trade against a trend generally. So you can see the letter E, F, G, H, right? It's constantly making higher highs. So we look for some 4 consecutive bars. So especially E, F, G, H. People keep on making one time framing. So we call it as a one time framing up because it is constantly making higher highs and higher lows. So what happened after H? There was an IB breakout. No, there's no IB breakout here, but we've seen an IB breakout on Bank Nifty, right? So what happened after one time framing? One time framing got stopped, and then market got reversed on the other direction, right? So generally we use an complete higher high, higher low formation. Even one tick below the market is going down, so we don't consider that as one tick one time framing, right? So whereas an theory says and one tick down below the previous low or previous high is fine. That's what the theory says, but from the practical trading perspective, we don't take any sort of one tick below or above. It should be a perfect one time framing should happen. Then only we'll try to play for mean reversion trades. This generally we observe on 30-minute time frame to trade. We look for some intraday opportunity, right? So you can see there was a clear intraday opportunity. So whenever one time framing is happening on and we are in the long position, we tend to take some partial profits. Otherwise, I mean, if you are seeing some nice opportunity, if you are not in the trade and you are seeing one time framing, you should look for some, intraday shorts, sort of. Likewise, if it is constantly making lower lows, let me check if I am having any observation here or not. So similarly, one time framing down also happens in the market, right? Let me check if it is there any. Again, you can notice here, yeah, here. So you can see that the letter B, C, D, E, one time frame downwards, right? Followed by there was at the F period there was an sort of an outside bar. It stopped the one time framing. So this is what I'm seeing. I mean, in monthly charts we are seeing in 6 continuous one time framing, like letters B, C, D, E, F, G. It's continuously one time framing. Somewhere the one time framing has to stop, right? So one way is an outside bar. An outside bar on monthly, it's quite unimaginable because this month we had almost lost again and 600 odd points. So and probably an if it is an outside bar, it has to make a newer low followed by an it has to break an previous high, right? So the one time frame has to stop on the monthly charts. We can go to the monthly charts here. So monthly charts. So the one time frame is one time framing can stop in two ways, right? So either it can make an newer low followed by an breaching the February month high, that is somewhere around 7,600, right? The other way is it doesn't break the newer low, but still it keeps on making an fresh high. I mean, right? Or there is also possibility of making an inside bar. There are three possibilities, right? So I'm seeing that currently the market is extremely oversold, right? So there is one point is I'm seeing an inside bar. The inside bar is it is going to take it's going to kill more time, right? And the optimistic point is it could either make an downwards followed by an breaching on the upwards. That's why that's where the one time framing gets stopped. Somewhere the one time framing has to stop, right? So I haven't seen any 6 continuous month of making an higher highs, lower lows and lower highs. On the it happened. It's happened in the trending market, but in the negative market, this is the first time we are experiencing, right? So and I'm seeing a lot of reference level. Let's see what is in the store. So what is your total Nifty view? So that's what I'm saying. I mean, I'm seeing a lot of reference levels, so I stopped thinking negative because the street is completely negative. So I'm just looking for some longs. I've taken some Nifty options longs. And I'm seeing a lot of gaps in the Nifty as well on the top side. Very recently, the gaps on the downside has been filled. Let me get into the gaps chart as well. This is Nifty gaps, so we can see a lot of gaps over here, right? So we have 4 gaps, almost 5 gaps left in the market. So for somewhere around 8,200 zone and somewhere around 8,100 levels, and again we have a gap at 7,720 levels, and we have an gaps somewhere coming around 7270 zones and then 7370 zones. So we have almost 5 gaps left in the market to be cleared, right? So if it is going to clear the minimum gap, it has to bounce back till 7250 again, right? So again, there are gaps are having a high probability zones, but the information is when the gap is going to get clear. That is where comes the challenges, right? But the one thing is I'm seeing too many reference levels again. So this is the same thing I repeated in the last week also. Last week, a couple of levels got cleared, and again the market fallen down. Once again I'm seeing too many reference level again getting created in this zone as well. Right. Otherwise, I mean, if you are in charts, ensure that you're trading. You're trying to follow some systems. But I'm not saying like chart doesn't work in this market. What I'm saying is, if you are in charts, make sure that you better go with the type stop loss, right? You better go with your type stop loss. I mean stop loss. If the gap is your stop loss is getting triggered, make sure that you are getting out of your position. Don't hold on to your losses for a long time, right? Which is the best AFL for drawing MP in AMI broker? There's an indicator called MP light, right? And also there is one more MP with letters. There are two AFL is there, Mr. Sundar. So using that you can get it in AMI broker AFL. So without any charges, it's of course free of cost. But if you want to try it out with Ninja Trader, currently the best opportunity, best availability is from Finalgo, fin-alg.com. Right, so it's quite an paid sort of indicator. The only thing is you get a lot of comfortness, and in AMI broker, to me it's not professional, but for learning purpose it is fine, but you cannot get too much of information from the market profile. There is no opportunity in AMI broker like zoom in, zoom out, right? So a lot of drawbacks in AMI broker, but for learning purpose it is fine. For professional trading purpose, it is recommended to go with an market delta or Finalgo sort of products. Okay, so I guess this answers your question, Mr. Sundar, Gomati, and Nagarajan. If you have any questions, you can send me a mail, right? I'll be happy to reply to you. My email ID is Rajendran. Let me put it down over here. So my email ID is rajendran@marketcalls.in, right? Yeah. So I guess we can conclude the session, and we'll meet again by probably the next schedule is happening on Wednesday. That is on 2nd of March, and again one more at 9th of March, right? So thanks everyone. We'll see you in the next webinar.